protecting Main Street from Wall Street. It's time for Money Unleashed with Eric Johnson and Kyle Allyn.
You have to have a plan where you know if the market's going to go up, what happens next. And you also have to have a plan where if it doesn't go the way you think, you know what you're going to do.
It's time to put you back in control of your money.
I'm not trying to predict the weather, which is kind of what we're talking about, right? It's predicting the stock market. I'm trying to build a better boat.
This is Money Unleashed with Eric Johnson and Kyle Allyn.
Welcome to Money Unleashed. I'm Eric Johnson. Joining me is Kyle Allyn. This is all powered by Hoffman Financial Group. So we're in a bull market, everybody. It's odd about this, right? We talked about the definitions of what a bull market is. You know, back in 2022, October 15th, that was the bottom of the bear market. And so some professionals are saying that's when a bull market started. However, there are other professionals that say a bull market started when we hit new all-time highs from the technicals that are out there. And the reason why we're pointing this out is the market has been running up for the past 2 years now. When the bull market started it's what's in question, right? But the reason why this is important is oftentimes financial professionals disagree on the definitions of what is actually going on. Remember, Kyle, when we had the recession and then the government came out and said we're not technically in a recession, but we did have 2 negative quarters in a row of GDP going down?
Yeah, I think the hardest part for the listener is when you hear one professional say that the bull market started in October and you hear another one say that it started in January, it almost makes you want to kind of give up. You're like, wow, even they don't know when it started. But I would argue that it's less about technical definitions and it's more about the disciplines you deploy.
Agreed.
When you see this, I'll brag on you for a second, right? So when we went through October of 22, there were very few bulls. In our industry, most people were bearish. And the stock market doesn't go down 20% for no reason.
Right.
It was down because there was chaos. I mean, we had a once-in-a-generation collapse in the bull market. We were dealing with the
bonds went down due to interest rates.
Exactly. It's
war with Russia and Ukraine.
It was scary,
yeah.
Right? And so then the question becomes not what is the technical definition or when did it start. I think that's cute for TV. I think the question is, what do we do in those moments? We've talked about in the past that the market's down, 5%, 95% of the time, 10%, 63% of the time. So I would argue that much like you led the team and led the firm and all the advisors got on board, in that moment when we see a sell-off of that magnitude, it may be only 5% for some clients, but it may be as much as 50% for others. It's time to get back in the market, right? It's time to move back into the equity class when you see the market down. And I think having discipline to, start to purchase on the way down or start to sell on the way up, those disciplines are really what we're trying to teach people. So I understand that people get confused when they hear us all arguing about when and where things started, but I would argue the discipline from buying those things. I mean, today it looks amazing, right? When you look at Meta.
Well, everybody thought I was crazy. Everyone's like, you're crazy. And I'm like, wait a second. Because that's how Warren Buffett does it. I will call myself a Warren Buffett disciple. I emulate all of the strategies that we use around what Warren does, and it's very simple. Here's the odd part, is nobody ever wants to do it when it's time to do it. So the disciplines are tough. So when the markets are going straight up, yeah, it's time to trim a little bit and bank those gains, but nobody wants to do it because they love the roller coaster ride on the way up. Then when it's going down, nobody wants to buy or reposition because they're afraid it's going to keep going down. So it's a very contrarian way of looking at things. But yeah, when everybody's freaked out and lighting their hair on fire, yeah, it's time to reposition. It just makes sense, right? The companies that won before are going to win again. But when they go down as much as they did, that's silly. They're on sale. You have to do that. So I appreciate you calling me out for that. But everyone looked at me like I had a horn growing out of my head. And I'm like, mark my words, here we go. And then sure enough, we got to enjoy a nice little run here. But that doesn't last forever either. So you're right. It does involve the disciplines of doing the proper things in the right way. And it also outlines the fact why you need an advisor to help you do these types of things. Day trading when the market's going up is simple. Like anybody can throw a dart at a Wall Street Journal and find a stock and go up and you feel like you're a genius. When you start experiencing the volatility, and we do have a 10, 20, 22% correction like we did in 2022, then all of a sudden that's what differentiates being a day trader and somebody who knows the proper disciplines of what to do. And that's why you have to have an advisor help you out. And this is precisely what we do for everybody. So guys, if you're out there and you're doing this on your own and you have your hands up in the air, like, what do I do next? Give us a call. We're happy to help you out. 404-341-6767. That's 404-341-6767. Or you can hop online and check us out on your computer, unleashyourmoney.com. You get to check out the whole team, mash that button, portfolio X-ray or sector rotation, which is what we're talking about right now. And we're happy to get you in front of one of the great advisors we have here at Hoffman Financial Group. Shoot, might even be me or Kyle. So give us a call, 404-341-6767. Yeah, it's really interesting because one of our favorites is Josh Brown, right? Like you love Josh Brown in the compound. I love Josh Brown. He's the CEO and manager of Reinholtz Wealth up in Manhattan. I love this guy. I mean, he's our age. He talks like we do. He has the same perspective we do, but I have a different perspective than Josh, right? He thinks that the bull market started at the dip in October 15th, and I think it was January 12th of this year when we broke through to all-time new highs. So that's kind of interesting, isn't it?
Yeah, and I think it's okay. I understand why the public gets confused on these things because it's confusing. I'll give you another one that's confusing. Right now, we're seeing all-time highs in the market, but the VIX, the volatility index, is also above 20. So for those of you that don't follow the markets a lot, there's the certain things you can look at that give you some clarity on what's going on. Well, one of them is the VIX.
So real quick, just for everybody out there, what the VIX is it's an index, and it tracks options, right? It tracks calls and puts to hedge bets in the market. So what Kyle just simply said was we're at an all-time high, but yes, there are investors out there that are hedging their bets, and it might have to do with the election. It might have to do with just we ran up so far so fast we're going sideways for a little bit. It's not necessarily a bad thing, but just people are making sure their bets are hedged because we're kind of going sideways for a little bit, right, Kyle?
That's right. And I think the way you just said that makes a lot of sense. I heard this quote recently that said, every previous panic seems like an opportunity.
That's right.
And every future panic seems like a crisis.
That's right.
Right?
So always look back. I should have done this back there.
That's right. So what you're mentioning is it might be this or it might be that. It might be time to hedge. It might not. So one of the things, and this is kind of what we're talking about here, that a financial advisor can help you out with is understanding the moment you're in. First, the environment. Hey, are we at all-time highs or all-time lows? Is it October of 22 or is it October of 24? They're different. At the same time,
the world's different.
What does the economy look like? What's going on? And then what do we do with that? Last night I was doing a workshop where we were talking to a bunch of people, and I said, okay, how many of you know exactly how much you lost, peak to trough, in the last pullback? Very few hands went up. Crickets.
Yeah.
On the flip side, I said, okay, whether you define the bull market as since January or since October, how much did you make on the way up?
Yep.
Right? So the other thing that we're able to do for clients is give them a portfolio X-ray.
Yeah.
We're able to pull back, open up, and say, all right, if things are bad, here's where you might be. If things are good, here's how much of that prosperity you're going to take in. So understanding the environment is important, and I would argue more important than the technical definitions. And also understanding what to do in those environments is incredibly important. So step one, the first thing you should do is become aware.
Portfolio X-ray, that's how you do it.
That's exactly right.
So I love these, right? Because what happens is when people come in, they take advantage of our complimentary consultation, and we do a portfolio X-ray. We run two different reports. We run a Morningstar report, and what we do is we ask you to, please send your statements in. So we don't care about account numbers. You can black them out. We don't care, right? We just want to see how you are invested so we can analyze it. Because 9 times out of 10, most people, if you're in a 403B, 457, or 401k, you're in mutual funds, right? And it's very difficult to measure or manage those because a mutual fund's got a mystery manager who you're never going to meet, who charges you expense ratio fees, which we also go over, the unnecessary fees in our portfolio X-ray. But it's very hard to determine what is in the mix of that particular mutual fund. And oftentimes people are over-invested in mutual funds. They're so far spread out that they're not getting the performance that they need. So I love the Morningstar report because it identifies, hey, do you have non-U.S. stocks in your mutual funds you didn't know about? Or, hey, did you realize that you had this many bond funds that are still down 2 or 3% from 2 years ago, 3 years ago? People are like, wow, I had no idea. So it's like reading a map. You don't need to know where you need to go on the map until you figure out where you are on the map first. And that's all the portfolio X-ray does. Then we also back it up with a quantitative analysis, right? And that gives you those types of answers to the questions you propose. Like, how much did we lose back in 2022, assuming no changes were made? Oh, you lost 22%? Well, what does that mean you have to make back? What do you have to make back? That means you have to make 44% on the way back up, or twice as much percentage to make it back up. And oftentimes, Kyle, people come in and we're doing these reports for them and they might have lost 20%, but they're only back up 15. They've got work to do, right? So 9 times out of 10, we understand why people are coming in here because they're seeing this huge 2-year rip in the market, and they're still not back to where they were before it went back down again. So that's why repositioning, we refer to as a sector rotation, is so critical because if you don't, I look at a portfolio kind of like an engine. And most of the time people come in here, they got a Corvette chassis, but they got a Pinto engine. And that's the problem. You got to make that engine reflect what we see on the outside, which is a nice big number. But if you're averaging 3 or 4% over the past 3 years, you got a Pinto engine. We got to tweak the carburetor. We got to get the alternator working. We got to make sure all cylinders are firing on this portfolio to reflect what we're looking at. So you can have $2, $3, $4 million in retirement, which is, we're going to talk about this in a different segment, why that's so important. But yes, you need to have it checked out. You need to make sure that you're making the proper moves in positions for your portfolio due to the time. That's why it's so important, everybody. You got to have an investment advisor. We do this for everybody on a daily basis. Everybody, if you don't have a plan yet or you need an advisor to help give you clarity on what's coming next for your portfolio, give us a call. 404-341-6767. That's 404-341-6767. Or hop online and check us out on unleashyourmoney.com and simply mash the button Portfolio X-Ray or Sector Rotation. We'll get you in front of one of our great advisors and we can help you out in the future.
Eric Johnson and Kyle Allyn are investment advisor representatives of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.